Good morning, folks. Today is August the 31st, 2020. It's Monday, and I wanted to show you a trade on silver today that I think has a pretty good risk-reward ratio. Just looking at my overall positions for the day, I think I'm pretty solid. I didn't get a great fill on my zero data expiration ES trade, my E-minis, but I got a lot of extrinsic value still there, so still looking pretty good for the day. Assuming the markets hold, everything else is going pretty well. Got a really bad feel on this silver trade that I'm going to show you here. I did this silver trade when? I think it was last night. There it is. 6:21 p.m. last night, Sunday. So silver is tough to get a good feel on in the normal market hours, and it's almost impossible in the aftermarket hours or in the Sunday evening session. So I didn't get the best fill on this, but I think it's still a pretty enticing trade from a risk-reward ratio. And so I want to show you this trade. You guys know the story with silver and precious metals in general. Gold, silver, they've just obviously been taken off like a rocket ship. Silver a little bit more than gold. But this is a way to play this idea. You know, you see this big run up here that we've had in silver. We've had this sort of pullback and consolidation. It's supported here at around the 2650, 2660 level, and it's trying to burst back up above that now. So if you are a proponent of precious metals and specifically silver, and you think that it's got a little bit more upside in it like I do, well, here's an interesting way maybe to trade it. Here's a strategy that I want to show you where you have very little at risk versus what you could potentially make. And the trade I want to show you is right here. So obviously, and we can go by this one by one, pull these off right here. We could just do what I have highlighted right here, which is buy a call option on silver. Now this is the next expiration cycle that we've got going here, the September 24th expiration cycle. So 24 days to expiration on this. We could just go buy that call option, of course, and you guys get how buying call options work. Tons of upside potential, right? I don't know what that option is selling for right now. Let's go look at it price-wise. So about 800, 900 bucks. And that $800 or $900 purchase has some really, really big upside, right? If we just look at that, again, let's go back down to the purchase of just the call. That $800 or $900 purchase, if we get up here at 34, oh my gosh, it's turned into $20,000. It's amazing, right? But of course, you guys understand the problems with that. Low probabilities of success, a ton of theta eating away at that. You got to cover the cost of the option. So, you know, you got to have a big movement here even before you start to get into the profit zone. All of the issues that you have with just simply going out and directionally trading something with options, whether it's calls or puts. And so one of the things that I did here that you can see is I subsidized that trade just a little bit by going ahead and saying, listen, I don't need unlimited upside potential in this thing. I'm not greedy. I'll take a little bit of upside, and I'm going to cap this trade by selling this 32.25 strike price against it. And so if we look at those, now you can see what I've done here in this trade is I've basically subsidized the trade a little bit. You can see now that I do have a cap up here on how much money I can effectively make in this trade. But the amount that I can make, as you can see there, is pretty darn enticing. It's about $12,000 is what the profit potential on that trade is. And so that's pretty exciting, I think, if you look at that number. Plenty of upside, but it's still a debit trade, right? I still had to put up some money to do this transaction. And so the final part of this trade right here is right here, selling this credit spread on the downside with the puts. And if you add that in now, you can kind of see everything that we've got going here in this trade and why I really like it. I think it's a nice trade to be looking at here as we're going forward. Let me get rid of that and let's go look at all of our positions now. Should we get them all? Okay. So the thing that I like about this trade There we go. You can see it's a pretty decent probability of success trade, but here's what I like about it. I've got roughly about $3,000, $2,500, something like that, at expiration 23.90 to be exact. So I've got 2,400 bucks at risk on the downside of this trade, and then on the upside, I've got almost $14,000 of profit potential on the trade. So I'm risking a couple thousand to make 13,000. I like those probabilities. I like those odds. I like the risk reward ratio of this trade. I like the directional nature of the trade. We're going to watch this for a few days. What would we do if we didn't start to see the price movement that we wanted? Well, that's where the adjustments would come in. And we got a lot of ability to still adjust this trade probably over the next week and a half. You got maybe 10 days in this 24-day trade that we could come in and make some adjustments to that. But I just wanted to show you that quickly there, that I think this is a nice risk reward trade and an interesting way to play silver to the upside.